Okay, it says I'm live. Let me just double check this and then I'll get talking. Oh yeah, that's great. Hold on. Okay, nice. L Let me show you what I was gonna show. So we're on the monthly time frame here, and it's essentially like a pattern that I seen. It was working quite fractally. So it's this, where we have a down close candle, the next candle will close above, and then you expect that next candle to dig back down into it and continue. So let's keep let's keep this in mind, and I'll show you what the weekly looks like in this same range. So remember the monthly was here. Now for the weekly, we've got a very similar pattern. We've got our order blocks here. We go higher, and we're reacting from obviously like an over a multiple like overlapping PD array zone. So we've got our fair value gap, you've got your order blocks, you've got this is a break, yeah, it's a breaker because that took the high. So you've got your breaker here, you've got an entire mitigation zone which would be from that high to this low. So that's 4 PD arrays right there. Now here's the same pattern though. You see we create the bearish candle inside that higher time frame PD array, with the next candle then closes above, and you expect the wick to body is the most sensitive part. The next candle touches the top of this and we get a reaction. So let me show the daily now, because it goes even further. It goes to the daily, right? So that, remember that it's same range. This was the higher time frame PD array point of interest we reacted from, and it was in here if you remember. So it was like this, it closed above, this was the order block candle, and it touched the top of it like that. Now we do the same thing here. We got our two candles here, this candle closes above, so then you expect that next candle here to dig back into this range for a continuation. It does exactly that, right? And it's just interesting how if we're looking on the weekly, we saw this pattern of order block, fair value gap, breakout, mitigation zone, you know, this overlapping area. And then on the daily, you've got exactly the same here, different area, it's mine. So you've got your fair value gap, you've got your order block which it touches, you've got, this is an entire mitigation block, and I'm sure maybe there's SMT here to suggest that this might be a breakout on ES. We could actually quickly check. No, it wasn't, unfortunately, but very similar. And so sometimes when you're waiting for your premium and discount, right, you might draw something like this and think we need to touch discount before continuing. But here's two things, right? We've got a BPR that kind of limits our ability to get to 50%. So this is how I look at the market. It's not exactly what ICT has said himself, but it's very similar to kind of what he's teaching. If this area and price is balanced, let's say, so even without the BPR, this is a balanced price range from this high to this low. When we close back above it, this shouldn't be traded to, although we can, because we might want to seek either optimal trade entry, you might want to seek a discount PD array. It's just something to keep in mind that, like, when you're looking for your retracement, what you want to do on your higher time frame charts is look for your overlapping PD arrays. So yeah, the fair value gap, the order block, the mitigation block, and where they all line up is a very high point of interest, high probability point of interest. So that's what I wanted to discuss first. Now I'm gonna jump down into the 4 hour. And let's actually check our bias now. So let's get our bias for today. Daily, we've got our you've got our fair value gap here. 4 hour, we've got, let me see, okay, so we've got a 4 hour closure below these three bullish candles. Here's what I would expect. Okay, so this is something that's a little bit more advanced. Sometimes it's easy to see what's in the charts, but sometimes it's harder to see what's not in the charts, and that can also suggest something. I'll give you a good example. Here we've got a fair value gap that we're touching into, a 4 hour gap. Now you'd assume that based on this reaction that we might continue higher. However, due to the higher time frame, the daily is the parent of this. So you need to keep in mind that the daily is creating a fair value gap, and it might want to touch into the daily, which it's currently doing, or it looks like. Also, what might be happening is we might be making a weekly fair value gap. So when we think that the daily is gonna, completely go up, the weekly might want to come down and touch the fair value gap it's making. But this was something I wanted to highlight. You can see that actually, as we're respecting this 4 hour gap, we're not making a fair value gap, meaning we're not getting displacement. There is strength, but to a certain extent. It did validate this as an order block, but you can see that this next candle has disrespected that. And actually, it's likely in the 40 minutes that's left, we're going to create another bearish fair value gap. So what's happening? We're making a failure. So there's actually only two types of reversals in the market. There's a failure swing and there's the stop hunt. So here we've got our failure swing. This is in ICT's core content, by the way. I forget exactly which month, but he does speak about how there's only two types. So we've got our failure swing, and typically you would want to look for some kind of like market structure shift, which we might find lower in the lower time frame. That can come in different forms and different PD arrays, but this is definitely looking a little bit more bearish from the daily, considering also the weekly expansion. Let's check. Okay, so we might want to retrace into 20 to 30% of the range, roughly around here, which is what we're kind of doing. Yeah, the daily was looking a bit bearish. 4 hour definitely looks a little bit bearish. Let me work to the 1 hour. Let's just check the NWOGs. Okay. So 1 hour had already created a bearish fair value gap, and on here it's a little bit more clear. There is equal lows. That's what this is marked, as well as this being the daily fair value gap. So you're gonna tell me we're gonna come right down to here, a few ticks basically away from a daily point of interest, and completely reverse? I doubt it. Now, do you see where's the strength in this buy move, in this bullish move up here? There really isn't much strength. There's no buy strength. I'm talking about where's the displacement, and displacement just equals fair value gaps. So where's the fair value gaps? There isn't, right? Okay, at the top maybe, but compare the size. Do we look more bearish to bullish? We definitely look more bearish. Here ES did sweep that low. Let's check YM, because we always must compare YM. So what's YM done? Okay, YM did take that sell side. What about this one? It did also. Let's go on the low. I'm just gonna mark out some objectives. I don't look at YM anywhere near as much as I look at ES, because these are the two that are mostly correlated. You'll find some good SMTs and good trades. Let me check the 1 hour for ES. Okay, a very similar pattern. However, something like, although we're saying we're bearish, we cannot forget that this candle is bullish, right? Like this is a very strong expansion. And what might be happening is a power of three on the monthly. Okay, this might be getting a bit techie right now, but if you consider this monthly, it has 14 days left, and let's just assume that the monthly wants to make a fair value gap. We don't know the size, but let's just anticipate for this scenario that it might want to make a fair value gap here. What does that mean? That means in 14 days it has to expand. It has to continue its expansion, and then that next candle can only retrace to whatever it needs in order to make the fair value gap, right? And then the reason I'm mentioning this is because that like knowledge alone might mean that although you're seeing the daily as okay, it looks like it wants to touch here, the 4 hour definitely looks a little bit bearish, the monthly might override that and continue this push because we are still in a 4 hour fair value. Right. So something to think about. If we're marking the dealing range that we're in, it's definitely this high to this low, because ICT's definition of the dealing range is the most recent energetic price move from a like a sweep to like a sell side sweep to a buy side sweep. Now this is like clearly the dealing range. 50% lines up with this large imbalance that we've got left open. I did feel slightly. The 1 hour. So we're touching back into our 1 hour point of interest. And if I was to be bearish, because I'm not trading higher time frame, like I'm not swing trading, which means like even though the 4 hours bearish, I'm not gonna place a trade like this because what? This is not how we trade, or at least it's not how I trade. So I could be in days in this trade, right? And that's why we need to wait for a lower time frame to sync up with that. Now, if you're looking at the 15-minute here for ES and NQ, we have to go with what the market structure is giving us, which means that if we are creating bullish market structure, we cannot just blindly sell, and we can't. So you wouldn't want to try and sell into a gap like this without lower time frame or without higher time frame confluence, because essentially what you're trying to do is you're just trying to predict a reversal off the left side of the curve, and that's not useful, because if the market maker model if the market maker model needs to reverse, you're always going to get your first stage and second stage distribution with this dot and this dot, meaning when it's coming back up here, if you're saying this is the left side of the curve, it's right, we might get a reversal, but you don't want to predict that reversal. You would rather wait for the confirmation of a 15-minute order block to be created, maybe a 15-minute gap, and then seek the trade from that. You wouldn't want to yeah, so we've got our sell side mark. Let me see the sessions here. Where are we in terms of midnight? And let's look at our daily profiles now. So we've checked weekly profiles off. We've checked market maker structure on higher time frame to lower time frame. Now daily profiles. I've actually just made in my Discord a weekly profiles like notes tab, and it's got a lot of detail in there, so you'll be able to see with a bit more clarity. I'm just getting it up myself now because I use this material. From Asia, what did we do? It's not much of a consolidation, but you could say it was building up some level of accumulation because we got our first sweep and second sweep in London with a large displacement down. So if we sweep Asia's high and displace lower, for a classic sell day, you would expect a New York AM retracement for a continuation, maybe in the PM also. Or the PM could do something like this. Let's say we already take sell side before PM. PM could retrace entirely back into this range. Or we could seek from here the entire reversal for the next market maker model, right? If we wanted to plan out the market maker model from the left side here, you could say accumulation, first stage, like a consolidation, right? Sorry. This is going to be your first stage lower, maybe into a second stage to then get your market structure like that. And this is all just potential. But it's good to plan ahead because you don't want to be surprised when things happen in the market. You want to weigh out every scenario possible. So right, I'm just going to look at the market structure. I mean, it may even be possible because I'm looking at higher time frame there. So even though I'm assuming that price is likely to come down and take the sell side, that might not be the trade that I take, because if market structure is going to give me a bullish move into this dealing range, so where's 50%? Slightly higher than where we are. This is your first premium PD array. Then, you know, we'll see. A closure above these two down candles would confirm that to me as an order block. And yeah, not forgetting that we are in, even though we might be waiting for this 15-minute refined zone, you can't be always too picky, because don't forget, we are in a 1 hour large imbalance. There is no BPR here, a fair value gap BPR. So I would actually expect maybe a 50% retracement in this scenario, which it likely should give. And so let's mark these out, because if we close above these, this could be a point of interest for a potential long. Opening range gap, right? Let me check that. I just checked my trading checklist. So opening range gap is basically from yesterday's settlement price to 9:30 open. So if we're going to check that, it would look like, I'm just going to draw it roughly. Oh no, we're down here, sorry. So I draw it from the candle close there. I'm going to toggle back to electronic trading hours, and then I'm going to adjust it. So I know that because open is in roughly 2 minutes, it should likely be around here. I'm going to adjust it properly for when the 9:30 does finish, but roughly I know that we have a gap down, which supports our bias and our idea that price would likely want to seek equilibrium, at least maybe before a continuation lower. And we wouldn't force, don't force, if that's happening and 9:30 just gives us an entire spike up, right, with the next candle, yeah, 9:30 spikes up, don't be like trying to catch instantly the reversal. I would much rather prefer and wait for the confirmation, which would be a bearish candle, maybe closing below here to confirm this as a breaker or this is an order block, you know, to give some sort of 15-minute market structure for yourself instead of trading off the left side of the curve. So we know we got a gap up. We've checked premium and discount, economic calendar. So it's not something that I spoke about, but I did check myself. You always want to be aware of the news events that we have. Now, we have a 10 o'clock news event, which means because we trade time and price, we would much rather wait until our news event to clear the manipulation and make clarity in our bias, which means even when market opens in 30 seconds, I wouldn't recommend trading until 10 o'clock. It's in my rules to wait exactly until 10 o'clock, or at least till every red news event is has been triggered. Oh yeah. Yeah, so wait till every news event has been triggered and then trade, because one of the rules of news events is, it's not in this scenario, but if there is 2 red news events in the same day, it's likely that price will consolidate between these two until the second news event has been released. Okay, so 9:30 open. Let me just draw my gap. You can see we're expanding higher. This is good. I think we've touched 50% here. I can double check. I'm just gonna draw. Okay, we did touch 50%. I'm gonna line that up. And let's change that to 50. Yeah, so red news at 10. It's nothing major. It's just like normal red news. Also, something that catches a lot of people out and it's good to be aware of is even though it's Friday and you don't need to check and you only need to check Friday news, that's actually wrong. You need to check Monday's news and you need to check the weekend because sometimes if you've got a bank holiday on the Monday, that can affect the AM and PM of the previous Friday. And in this scenario, we don't have a bank holiday until Wednesday, which means we're fine. Yeah, that's something more for PM to focus on and think about. Let's just see how this respects and reacts off this 15-minute gap. We could go to the lower time frame, but I assume that it's going to be a little bit messy because can you see here how we are getting some movement and getting, like, look at these swings, right? There's spaces, there's fair value gaps being made, you know, and then look at this. This is accumulation right here. So what we could be looking at is, if you're familiar, the power of three. We get our accumulation, we get our manipulation and distribution. Let's see. If you would have, let me check YM because we always refer to the three futures, ES, YM, and NQ. By the way, you know why? Here's just a little tip about fair value gaps. So something you might not know, but really the fundamental as to why the fair value gap works is because of this. Let's note this high here. In fact, before I mention this, ICT has publicly said that the only way for a buy program to start is to sweep a measure of sell side, and the only way for a sell program to start is to sweep a measure of buy side. So we can't go lower until we hit buy side. Now, when this touches this fair value gap, what's actually happening is that's a high, as you can see. So that fair value gap is represented on a lower time frame as a high. So when it touches the fair value gap, what's actually happening is a total soup on a lower time frame. And you might not be aware of that, but markets basically move in total soup or sweeps, let's say, not exactly total soups, but sweeps. Now, that's important actually because this leads on to another tip that I can give. When you're looking for SMTs, sometimes, like maybe let's say in this example, let's say YM comes into 50% of the dealing range. Okay, let's say high to low. It's come clearly into 50%, into a fair value gap. Whereas, let's imagine that it hasn't came into 50%. You know, let's say 50% is up here, and we're seeing a reversal playing out. The SMT is because YM has swept a high, allowing for that, for YM to go lower, which would then correlate to NQ going lower if YM was the relative strength leader, let's say. So, but let's actually check some lower time frame price action. There's no trade here as of yet because unless you're scalping even 1 minute, like look at this, we haven't made anything yet. There's no market structure. 5 minute looks quite strong. We're still waiting for that high to get, or this fair value gap to get touched. What was this I had marked? I'll remove that for now to keep it a bit more clean. let's switch back to ES. Wait, so yeah, I had a few topics that um I wanted to discuss. Let's go over them because these streams are meant to be purely educational. Like I'm trying to put out, I don't know if you can tell, as much value as I can. I literally like everything I've ever learned from these trials, from watching ICT hours and hours and hours, I'm trying to put out now, bro. Because I was once okay. Yeah, some guy was talking to me about confidence, Robert. Now, in my opinion, if you're ever feeling unconfident about yourselves, it's basically one of two reasons. Because I've been there. It's either you're not confident because you actually don't know enough, or you're unconfident because of experience. The second one is harder to build just because experience takes time. Whereas something to do, let's say you're trading something like this and you've got your limit set on a sell right here and you've got your stop loss, I don't know, like this. If that's how you trade, that's completely fine. But I know for me, and a lot of other people have agreed with this, there we go, we touched it, that this is risky and this is what is going to make you feel uncomfortable. Oh, I can't say it. Yeah, uncomfortable. So you would actually want to wait for lower time frame confirmation, which might be, you know, 1 minute structure break or verifying something. And even then, like you might be entering and still feeling fearful. Why? Because there's so much more elements to trading than just looking for a higher time frame point of interest with a lower time frame execution. If you know, if you jump on the market, right, and you're seeing clear equal lows, displacement lower, fair value gap, and you get your lower time frame execution, what is there to be scared about? You know, if everything's in alignment, then it means you should be confident. But and so that's why I think that that's just lack of experience if that's the case. Whereas if you're not using, I'm not saying you need to use every concept, but just knowing a fair value gap, an order block, and maybe a liquidity sweep just isn't enough. It just isn't, because there's so many things that are happening in price that you might not be aware of. Like, let's say here, you might not understand why has price only gone up to here and then left. Okay, well this is in a rejection block, right? And actually, if you wanted to measure 50% of this wick, okay, it doesn't quite get it. It looked like it might have, but or did it do it on the hourly? I think it did on the hourly, if I remember. No, I'm waffling. But knowing more PD raise than you think you need is helpful because the market can move from, like, let's say it moves to an order block, but then it moves to a reclaimed order block, then it moves to a, what did I just say? I don't know. I forgot what I just said. Rejection block, and then it moves to, and then maybe it produces an immediate rebalance with a BPR below, and you're sitting there thinking, yo, it needs to come back down to this zone, otherwise I can't buy. But because you don't know about immediate rebalances and BPRs, you're confused as to why it's only gone here and then it's gone up. And so you actually don't know market structure really, and how market maker models work. So yeah, just more learning and more experience. Adding more layers to your strategy. Okay. So with risk management, right? So before I talk about that, actually, this is something you want to know. So we are expanding higher. So is YM. So is ES. There's no sign of a reversal yet. There's no sell being taken. There's no sell that needs to be forced. Even though we've got our equal lows and our bias and whatnot, that's not what we're gonna do. So so this is a potential inverse if we continue higher, and this is a potential reclaimed order block if we close above. And it's not confirmed. Like, it's like not every order block, not every down close candle is an order block, just like not every candle like this is a reclaimed order block. We'll see what we get. even if it closes above it, is what I'm saying. But about risk management, right? Okay. Um. Oh, that's quite a deep subject. But if you're if you're trying to pass a challenge, I think somewhere between maybe 8 to 14 now trades, divide your max drawdown or total losses that you can have into like 8 to 14 trades based on risk, because actually your emotional stability in the market is more important than the amount you're risking. And the amount you risk, like your risk tolerance is different for everyone, and it's all dependent on um, how much you're risking. Like you could have the exact same strategy, but if you're just risking too much, you might not be profitable with that strategy because you're gonna end up messing it up, mismanaging your trade. You're gonna end up making problems for yourself. Whereas if you just risk less, you might be comfortable. Same can be for if you're under risking. If you're under risking, it's gonna cause frustration. It's gonna cause for greed. It's gonna be a cause for um like maybe you're in a long and you're thinking, oh look, but it's not enough, like I need more type thing, and then it only gets to here and you're thinking, oh, why have I just took that loss? Like, I could have just been satisfied with what I planned on doing. So controlling your risk management is directly correlating to your emotional management of a trade, because just as well as me, yeah, that if you put on a paper trade, it's so easy to hold it and look at it, and even though you want it to win, you don't want it to lose, because the fact is it's almost nothing. It doesn't mean anything. It makes it easier. And so if you make your trading, if you find your risk that best suits towards that state, is when you have your best results. I suppose that ties into psychology. It's possible in this 2 minutes left that we might respect this and use this as an order block, because remember, this is the first premium PD array that we've got in price. Like, price likes to seek premium PD arrays and create Judases. So what do I mean by that? Let's say price is bullish in this scenario and we're actually gonna go and take this high. Every premium PD array it touches, you will see a retracement. So it's touched the first premium PD array, which is the fair value gap order block, is going to get a retracement back into the dealing range. Then it goes higher. What's the next PD array? Okay, we could say this is the breaker. We could say this is the rejection block, etc., etc. Now, there's definitely more in here. You've got a mitigation block, etc. But as soon as it touches this breakout, you might expect another retracement before it continues, and that's why it's staircases, because it's allowing that market to come back and fill in the dealing range, I suppose. And then, this is also why sometimes you'll see price go all the way to buy side, but it won't touch it. Is because it's touching and it's reacting off the reclaimed order block for a retracement back into the dealing range. Don't forget, yeah. And then you're sitting there thinking, what? No, it's made equal highs. No, what? And but don't forget, sometimes there is a concept of equal body highs and lows, and how that is a liquidity pool to target. Because if I was to ask you, where's more volume? Exactly on this high? Or is it in this entire area where there's 3 candles overlapping? You definitely say these 3 candles. So if you know there's more orders resting there, and the market hunts for liquidity, not that you should change your trading style, but if you seek for targets equal candle body highs like this, targeted more areas of higher volume, you might be a bit more blessed. This actually reminds me though. So you see what I've just explained there? This actually might be the exact thing that's going on here. This is a rejection block. And what might be happening is, since we've touched this discount PD array, we're seeking a retracement back into the dealing range for a continuation lower. And we need to wait until that's confirmed. So we did inverse the fair value gap. I'm just going to mark that out. Let's just check YM and ES. So ES also has an inverse here. One tip I would suggest is when a fair value gap basically a BPR, but when it inverses a fair value gap to create a fair value gap, that's a strong, like, the amount of times I can place entries in there if I was to do something like that. If imagine this was the lower time frame. This is just so clean. It's super low drawdown trades. It may be, we're waiting for 10 o'clock, so don't be doing anything. Just trust me on that. You'll thank yourself more times than not. Because otherwise, what was you going to be a part of? Let's be real. Okay, maybe you could have seen this 1 minute as an order block being created, because what happened was 9:30. Okay, 9:30 was created. We initially closed above, but then we ran the lows, so we swept a measure of sell side, and then we had a closure back above 9:30, creating a bullish PD array. And actually I used to scalp like this, but I don't like that method. It's not as high probability for sure. Still works though. Let's get rid of this here. Let's get rid of that. So for macros, let's discuss macros, because macros is actually a really interesting subject. There's so much to know about macros. I'm gonna just get up a PDF. Right. This is a PDF I made myself. I'm gonna have to do this to show it on stream, because otherwise it won't show. Essentially, these are the different scenarios that play out. I don't use this much anymore because I look for a bit more higher time frame trades, but it's very useful if you are trading that lower time frame and you are expecting things to happen at certain times. So if you look at what happens at 9:30 or at 9:45 to 9:50, look at this template that I've sent in the Discord and try and pick what best suits the market pattern currently being shown, and this will likely be accurate and reflect in some trade opportunity, right? So let's actually just try this for once. Let's bring this over here, size it down slightly. Okay, what did 9:30 do? Did 9:30 sweep a measure of sell side? It did. So the possible scenarios already for a potential buy is this 9:30 sweep reversal. In this scenario, 9:30 didn't do that. The 9:30 buy scenario. No, not on this one, sorry, because this is the buys at the top. 9:30. No, we haven't got a retracement into deep discount before 10. And no, so it's more than likely that we'll get some sort of trade like this. What does it say? 9:30 liquidity sweep displacement, expect macro continuation. From 9:50 to 10:10. That's your macro time. That small window, and arguably you can extend it with, like, You know, you can look at 930 because 930 has an extension of that model. So if you didn't get an entry in 950 to 1010 and it still hasn't hit its target and there's valid bias, drawn liquidity, higher time frame PD rays being supported, then 930 can give you a retracement back into the range for a continuation if you missed the first one. That's why it was two stage on that photo. So yeah, what? Retracement, entry. Maybe. What have we done to the hourly? Okay, so the hourly closes in 8 minutes. And it looks like the hourly is getting inversed. So we may have been completely wrong about bias, but this is the amazing part, because we're gonna wait for the news manipulation. Oh, before that actually, let's just mention that even though it has inversed this, that doesn't mean anything. Wait, it's got 8 minutes left, so it could just drop. But sometimes it inverses fair value gaps just to touch the order block, you know? Like, because it inverses something doesn't mean that's your entire bias. But we're waiting for 10 o'clock, and we wouldn't have forced sells because what would we need is 15-minute market structure. Like, I would need bearish closes with a bearish fair value gap, which would probably likely mean maybe not even a sell today for me. And right, the power of three. So that next hourly candle, if we would, or something we would like to see, it would be desirable for longs, would be an open manipulation lower into your inverse, maybe into a 15-minute PD array for a lower time frame sweep entry to buy side. Okay, yeah, let's just wait for this 7 minutes. Let's see. Predictions is that news goes. I would much rather prefer to see news take us lower for the manipulation as opposed to higher. I almost forgot about this opening range gap because it was drawn a little bit small. As you can see, here's some notes about opening range gap theory. Now, we've completely inversed, or not inversed, but we've completely filled the opening range gap, which means that if you were bearish, you're less bearish than you were before, because a more bearish scenario would not have filled the gap, or even half of the gap. Okay, so you can use this gap theory to. I've got this written down. One moment, I'll get this actually. Opening range gap. Yeah, it's going to help aid with directional bias and lend an insight into how bullish or bearish the markets may be to look for appropriate targets. Meaning, if it had not filled this at all and did a slight retracement with a heavy drop, maybe instead of looking for this sell side, you would look for the next objective, you know, the next objective, and you just keep working like that. So it can tell you the strength of the market. So 5 minutes until this 15-minute candle closes and the hourly close. Let's mark some of these higher PD arrays for us to take note of. So this is our next fair value gap in premium that we touched. I should have had that marked a bit more sooner. And this line would be, so this is our reclaimed order block. If we were to close above, in 4 minutes. That could be, let me just do a little bit of calculation. I need to measure something. If I measure from the low to the high, yeah, okay, so let's say we were to close above this reclaimed order block. Due to us having news at 10, I doubt it would hold just here, but for scenarios where people are looking for entire 50% retracements, the market doesn't do that, not every time. And so this is how you can sometimes look at the structure of the market. Where's our 3 PD? If this candle closes right here, right now, let's forget that we've got these PD rays here. I'll put them back in a moment. But let's just forget that they're there. Where is our 3 higher time frame PD rays? Let's say 15-minute. That's going to hold price. Our first one is this reclaimed order block. Our second one is this inverse. And our third one is this fair value gap. That means that if I was looking at price now, and if I was expecting a retracement, the maximum I would expect is here. And even more so, if you can find 4, 5, 6 PD rays, because sometimes there can be 6 PD rays in one area, then you basically know you ain't coming down to 50%. Which is why now, if we check, if we end up closing above this reclaimed order block, I doubt it, and this fair value gap, that would be our 1, 2 PD rays, and the third one would be this reclaimed order block. So, what, a retracement into a very similar area? We'll see. Well, let's mark the fair value gap. Don't worry, I will be getting into like an entry model and showing more about exactly what you need to do for entries, how to look through your checklist, and finding higher probability selves like that. But everything I've spoke about just now, to do with bias, to do with market structure, everything, that is the bread and butter. That is how you're gonna find your good sales. Going through all of this every single day. Oi, let's go, bro. We are very patient traders. That's what we are. The positive affirmations. Would you rather rush into a bad losing trade, or wait patiently for a better trade? Yeah, the answer is clear. Your human emotions in the moment will always mix that though. It'll always get you feeling like you're missing out, which is never the case. There's always gonna be another day, really, unless something unfortunate happens. Oh snap! And there's always gonna be another trading day, right? Like another session. There's always gonna be another opportunity. You're never gonna run out of setups. So it's likely that we're gonna close above this. Let's see how this reacts. Did we? Oh, we did. Okay. So this is our reclaimed order block, and this is our inverse. Yeah, just because of news, like, we'll see what happens. It still could retrace down into this bit, but remember, right? we're not looking at wicks. The candle is live right now. So when this candle closes, it might end up being a fat wick, and the body might close here, which would show that it respected these PD rays. Because wicks do the damage, body tells the story. This is good. This is what you want. When it retraces like this is never something to be fearful of, because this is when it's given you a better risk to reward trade. You'd much rather enter down here with the profit, the target up here, than trying to enter up here like that, you know? Let's see. Okay, it did touch the top of this reclaimed order block. So what would I be doing now? Let's draw the reclaimed order block. Oh, like that. At this point, I'm happy with my bias, unless shown otherwise. So I'm happy to take a long because I can see ES is respecting bullish PD rays. It's currently in a volume imbalance fair value gap, so I'm expecting that to get held. I've got YM that I'm gonna just double check. Okay, so YM is in its order blocks. The last previous candle respected it. However, news has just released. You can expect manipulation. It might end up wanting to sweep this low, give us SMT. That's something we're going to look for. But on the lower time frame. So, now we're getting juicy. I'm going to get rid of a few of these. I'm going to get rid of this and just that, just to keep it. What did we have? This sweep for me is not good enough, because even though it was news manipulation at 10, I mean, it's possible. Alright, save Sky. Thanks for being here, bro. Yeah, so what would I like here? I'm gonna stay on the 2 minute because I don't really use the 1 minute. I just use it more for reference in case I want to see what happened on the 1 minute. Now, let's draw out these slightly shorter. And here, we want to see price conduct something like this. A market, a very short-term, lower time frame market maker sell model back into this range to then show a bullish structure shift and continuation higher to our buy side. And until we get that, there's no buy. Okay, YO has. Oh, okay. So ES is definitely. Oh, he's definitely dropping. We must be careful of how we select our liquidity sweeps for this scenario, because of how not 50-50, but it is kind of dangerous when 2 out of the 3 pairs are doing something like this and they have their own set of low resistance liquidity. Because if I go to the 1 minute, do you know what I'm saying? And if I check YM, yeah, it already started taking it. And so yeah, we need to be picky on our liquidity sweeps, whereas sometimes you can get away with not being as picky, as long as it doesn't do these like knifing manipulations. Let's see. I'll be super clear about a trade though. Like if there is a trade, I'll tell you exactly what I'm doing, all the levels, if I've entered, etc. Okay, we're actually in an endog as well right now. Two endogs. So that might be your third PD array. You see how, remember I was talking about our three PD arrays to support price. We have okay, no, it's fair enough actually. We did close above there, but that third PD array is only down here, which it's in right now. And so if we see what a continuation of this lower here, ooh, it might be time to consider alternatives. The type of liquidity sweep you want is a liquidity sweep that induces you. It's all about inducement. If the liquidity sweep gets you thinking that, you know what, we could be bearish, that is the best liquidity sweep possible, because then once it goes higher, like, this is what should happen in your mind. Price makes a low, okay, it goes up slightly, and then it completely knifes. And sometimes it does this in a very fast move. I've got some good trade examples of this before, where this is like maybe one, maybe two candles. Do you see how this has done this in like 4 or 5 candles? The next move is like 2 candles. And it's at this moment in time when it's here, it's got you thinking, do you know what? Maybe it's bearish and maybe it's going to continue lower type thing. But actually what happens is when you're patient, you see the next candle goes like this, and it closes above some measure of order block, fair value gap, inverse, reclaimed order block, something, and it gives you that confirmation that we're bullish, and you then know with full confidence that we're going for this high, because a creation of a breaker is literally one of the strongest patterns. So right, we're waiting for a continuation here. Now, I will just preface that I only buy below 8:30 and midnight. Now, when these prices are split in this scenario, like they are, so midnight's here, 8:30's here, and we're in between them, I only need one. So if I'm below midnight, I can buy. And if this was for sales, let's say, even though I'm above 8:30, oh no, yeah, even though I'm below midnight, I'm above 8:30, so it would work like that for sales. See, right now, if people are looking to take buys, I'd be scared, right? Because what's the liquidity sweeps you've had? It's nothing major. You want that higher time frame. Okay, did touch a 5-minute fair value gap. Okay, and sometimes waiting for these liquidity sweeps, you might end up missing a trade. But overall, higher time frame, like long term, waiting for the proper liquidity sweeps, you'll be thanking your account. Don't be the guy that sees this as the 1-minute breaker and tries to enter long now. Wait for something a bit more valid, because what was the inducement? Since 10 o'clock we've dropped. Okay, this is good, but it's not really made a clear low. Alright, this is what I'm saying about being careful now, because depending on how this 15-minute candle closes could determine everything. You always want to prioritize 15-minute market maker structure. So let's go back and let's just reevaluate what's happening. So yes, order block, fair value gap. It's in this larger, higher time frame fair value gap. However, it is creating a bearish PD array, or 2 bearish PD arrays, and potentially 3 if it inverses that, which is definitely not good. Okay, yes. Right, we're still waiting for a good liquidity sweep. Maybe on the 3 minute for this scenario. So, um, I don't know. We're waiting for something more. Let's check. Hmm. Um, what else was being asked? Okay, so identify a stop hunt. I think the difference between stop hunts and market structure shifts, like, so this actually might be a perfect time and example to showcase this. Would you consider this a stop hunt? Depending on how this closes, a stop hunt or a market structure shift. So it's it's all about a few things. One is the origin of the move. So where is this move coming from that's creating this either stop hunt or market structure shift? In this scenario, the move is coming from here, which is a premium PD array. Is it? Yeah, a premium PD array in a bearish market. So that automatically makes you think now, if this closes below this low, it's more than likely a market structure shift. Also, bias. So bias plays a heavy role into this. If our higher time frame bias is, I'm talking hourly, 4 hour, daily, if this is bearish, we know that this sweep or this potential move here is more than, if we're bearish, more than likely to be a market structure shift, as long as time and price has lined up. So for instance, if this was a random 7 o'clock candle that done this, so no session window, it hadn't, you know, it hadn't really done much, type, like it's not really a big move, then maybe I wouldn't even consider that important, right? Like I wouldn't consider it a market structure shift, and maybe more so I'd lean towards a sweep. But when you get time involved in this, that's when it's more important, and to look for it can lean more towards market structure shifts, right? Because if time's involved, there's usually a reason why that low has been swept. Okay, so we inversed this fair value gap, and we created reclaimed order blocks. Okay, I'm bearish because we inversed here, we made reclaimed order blocks here, and this is an order block here. So there's your 3 PD arrays on YM. ES did a very similar type of move, but not as deep. And then NQ, I mean, oh, it could still go for that high, but I rationalize the market by looking 2 out of the 3 pairs. If 2 out of the 3 pairs are telling me one market structure, I must follow it. So for this example, because both ES and YM are looking more bearish than bullish, even if NQ looks a bit bullish, it's more than likely better to be bearish. And yeah, this is why I just being more careful. Okay, what would need to happen if I wanted to take a sell? We technically have created a bearish order block this last up candle. We did close and respect midnight. So something like that maybe. Something I'm noticing here I would never take, but so this 1 minute inverse actually doesn't look half bad for like a very short scalp. Not that I would take that. Let's check the hourly on YM and ES. So ES's hourly is Oh, okay. This is interesting actually now. So the 4 hour candle here opened, it made no top wick and it traded all the way lower in the last 20 minutes. Does that look more than likely to go higher to create the top wick and fill this gap? Or does it look more likely to just continue dropping? Same thing for YM. Oh wow, look at that 4 hour candle. I didn't even check that. That's crazy. So we completely filled in that gap. And yeah, we did respect this gap. I suppose we might be getting SMT to later take this in the future. Because ES had touched its daily gap. Something I am eyeing up, potentially, just out of interest, is this 4 minute reclaimed order block right here. But I don't think there'll be a trade for me just because of how the other 2 pairs are looking. I need to wait a little bit of time. Hold on, I'll be back in about 30 seconds. Okay, I'm back. We could be getting a 4-minute closure over that reclaimed order block. This might be a trade I place, by the way. I need to mark out. Let's take a snipping tool. Copy that. Okay, I need. So, what would I do? Would I take this trade? I'm just considering it in the last little bit of time that's left. I am thinking about it. Something I didn't like the look of. No, this is gonna be a trade I'm gonna take. So I will place this. As long as this 4-minute closes above that reclaimed order block. Okay, so I'm getting ready to place my limit. I've placed my limit for both the stop loss, take profit, and entry. My target is that buy side. That if we get missed, I have re-entry methods. So it's nothing I'm worried about really. Like, let's say it doesn't come down to this entry, but it leaves this 4-minute gap. Yeah, I've got methods of getting in on this, so I'm not worried. If for another potential retracement down. Something I like the look of right here is how this 15 minutes closing. If you remember how I started this live stream, I shown the example of the monthly to the weekly to the daily, all doing this very same pattern where it would create and touch a higher time frame point of interest of overlapping PD rays, create a bearish candle, the next candle closes above, and then it digs into that candle slightly for a continuation higher. And that's what we're potentially looking at here. So, something. Okay, it might trigger me actually. Right. So I'm triggered in this trade. Where is this? 19. Why is it not moving? Hmm. Let's see. The Chronicles of Manipulation. Did I get manipulated into thinking that this was a buy when it was just a sweep to go lower? It can happen. Yeah, thing to look out for is this 15-minute close, which it doesn't look like it's going to create that order block. I mean, no, I can't say that yet, actually. There's 3 minutes. We could expand from here. Ideally, we would really want it to do that, though. 5-minute structure looks very clean because what we've done is touch back into our point of interest. 5-minute has closed above, creating the order block. Yeah, creating the order block. However, the 15-minute is the parent in this scenario. So despite it looking like it's nice and bullish on the 5-minute, the 15-minute will more than likely dictate that with how this candle closes. And it may not close above, and then the next candle might just do this. We're just planning and observing what we would like to see and what we wouldn't like to see. What is that number? So 39. I'll zoom in slightly. As you can see, I don't like looking at lower time frames when I'm in a trade. I think that's the worst thing you can do, because that is like, if you're entering a trade and then you start looking on lower time frames, you're gonna always just spook yourself out. Just sit on the 5-15 minute and just watch it. If it hits take profit, it hits take profit. If it hits stop loss, it hits stop loss. You're calm about everything it does, you're calm about. And the reason being is because you know that if you've created a structured plan and you feel confident with the data you've received in the previous trades, if you just repeat that 100,000 times, overall you're going to end up in profit. I'm basically trying to play the power of 3 on this 4-hour candle for this session, expecting that because we did this large move down in the first 20 minutes, I was expecting this was the open manipulation into this dealing range for the distribution higher and creating the high, or filling this, touching this gap. Because based on like pattern recognition, the more than likely scenario is that it touches this fair value gap to then continue lower. You know, like that looks a lot more cleaner than if it was to just drop. I don't know, but I guess we'll see what we get. Trading's hella interesting, you know. So many scenarios, everything's changing every second basically. Like, okay, what did the 15-minute do? It didn't close above. What have we got from the 5-minute? We are in a 5-minute fair value gap. I'm going to get rid of that, and I'm going to get rid of that. So my faith would be in the SMT that we've got with ES and this 5-minute fair value gap, like coupled with the fact that we're in these higher time frame PD arrays. So it's not like if we lose the 5 minute failed. It's like all of these PDRAs need to kind of like fail. So we would just be wrong on the bias. The entire entry model, and why can't I? There we go. I mean, yeah, I didn't like the structure we had on YM and ES. It didn't look clean at all. Especially how YM completely inversed those three PDRAs. What brought me back was the higher time frame. Like this is higher time frame because it's 15 minute, but oh, okay. But what brought me back was the 4 hour, considering that that candle didn't have a wick. But yeah, it's possible that it is just gonna completely just drop to sell side. Oh, very close. Okay, so that hit my stop loss there. So that's one loss. Let's analyze what we might have done wrong, or what might have done wrong. I think this is the most important part, is to try and learn from this, because otherwise you can take the exact same trades on repeat. So let's work our way down from the 4 hour. Based on how this 4 hour candle closed, even though I was predicting more of a bearish move, this definitely sort of changed that bias because of how bullish this closed. If you couple that with the hourly, that the hourly's in this inverse, then moving down to the 15 minute, we've got our 15 minute PDRAs which we respected. We move down again to the time frame, we've got our liquidity sweep, we've got our impulsive leg, our like displacement market structure shift type move that closes above our bearish PDRA. Entry was on that PDRA. Stop loss was almost a rejection block. It is possible that maybe I just had a very short stop loss, and that we might just have swept it by the tiniest bit to then go higher. Because this happened yesterday, really, actually. Let's examine YM. So the top-down analysis there was perfectly fine. Like, that is quite clean. Obviously, you know, bias can be wrong. You can't, it's not all about structure. So if the overall daily bias was bearish, which, like, look at this candle right now. I don't know. Does that look bearish? Maybe. But if it was bearish, they completely, like, it doesn't even matter if you look at these time frames, really, because then it's just going to be bearish. Right, let's inspect YM. So what did we get from YM? Right. Actually, I don't wish to re-enter this at all because it's not something I'm interested in. But I could definitely see this 4 minute type cell playing out. But what was the structure that we had from way out? So 4 hour, definitely bearish. Create a bearish order block. We touched it. This candle. Ah, okay. Yeah, I see now. Hmm. Yeah, since this candle created this as an order block, the next candle touched it, respect it with a body closure. This next candle was bearish. There was like an 80% chance this candle was bearish. Okay, that's at least now we're coming to terms with what we've done wrong. Let's see ES. A similar scenario. Created these order blocks. It did create the fair value gap still. And then that candle, I should have trusted this structure here. What did I get thrown off by? The 4 hour NQ. Yeah. So this candle threw me off a little bit based on how that closed. I was expecting more of a closure like this. Right. Yeah, we closed below the low. You know, it's a classic market structure shift. You've got your inverse, you've got your reclaimed order blocks, and you've got another PD array there, another inverse. There's your 3 PD arrays. Or the order block, you could say, right? And I think it respected mean threshold. It did. So that was your 3 PD arrays. That's okay. We must lose to win. Because for all you know, and this has happened to me in the past, you might have an absolutely terrible week or some kind of day or some kind of session, and you get in your feelings quite quickly because you start thinking, nah, you know what, I've made a mistake, like, and actually the next week after tends to be the best week you've ever had, because I think you make the best improvements from your worst losses, right? Like if you lose a lot, you're improving a lot. It's only up. Okay, let's just examine this structure though. We are no, let's get rid of this now. Okay, so I had got slightly manipulated by that move. In fact, I'm considering, let me just double check if this lines up with my rules. So, what have I got here to work with? It's not something I'm gonna do, but I will let's at least consider this as an option if it was to be for now. if you place something like that. You could do a higher risk to reward. You could do something like that if you really wanted. So what's happening on the 15-minute? Right, based on how these 15 minutes close, there may be an entry I would take on this, and that it has to be very strict. I would need the 15-minute to close below this fair value gap, close below this order block, and I might. What's YM looking like? Okay. Yeah, you know what? You know, we're good. We're good. Yo. Hmm. Okay, so let me note down what was the problem. Let me see. I'm gonna add this to my notes so then I can. Oops. I can remember for next time. Um. Well, why is this text so big? Manipulated by 4-hour candle closures. Wait, no, manipulated by 4-hour candle close. Yes, slash YM were this. This is a great lesson though, because so remember when I was saying about how I should have used 2 out of the 3 pairs to formulate your bias, and you want to look for your structure, that would have saved me from this loss. I somewhat broke my rule, but I don't feel that bad about it because in some sense you can kind of see this as a total soup sweep. But I mean, with hindsight, you're always gonna say, yeah, look, it's bearish. So if I would have stuck with that, I would have seen this maybe as being bearish. YM was bearish, and there was no buy. Ah, that's kind of unfortunate. I should have also considered that. What was our daily objective? Our daily objective was lower because we had already took previous daily high. The 4-hour structure on ES and NQ, ES and YM was bearish. The 4-hour structure on NQ was also bearish, but based on one closure. Well, we all make mistakes. That's something I'm gonna add up now. Yeah, I don't know if I'm gonna end up watching this any much longer because there's not gonna be that it's impossible to get a trade set up out of this now based on the time that's left. So there's no point really watching it, I suppose. I might have a look after, but yeah, that's me done for this session. Well, I hope, well, whoever's watching maybe learned something. At the beginning, I shared a lot of information about a lot of different topics. I suppose you might want to go through and watch that. Yeah. In any case, thanks for watching. Peace.